Wow. Hello, everybody. EXP agents, and maybe I heard some non-EXP agents might have snuck in here as well. Welcome, welcome, welcome. I am, by the way, Tony King, as it says down there, Vice President of Growth here at EXP. And have I got some exciting, incredible news that I wanted to come on and deliver personally. Guess what? EXP agents now have access to this incredible, incredible platform that is called AssumeList. What is AssumeList? Why is Tony King so excited? Maybe even more excited than usual, right? Y'all know how I get down. And so, look, AssumeList is a tool that finds homes with a low assumable rate mortgage. It is incredible. Listen, imagine a dream world where in this environment of 6, 7, heck, maybe even headed towards 8% interest rate. They're like, Tony, don't say 8. Listen, we're creeping in that direction. What if you could hand your buyer a 2.5% mortgage? Does that change the scenario for you? Does that change your business? Does it make it easier to sometimes recruit to your team in brokerage? Absolutely. And that is the magic sauce that we're here to talk about today with our partners here at AssumeList. Oh my gosh, I'm so excited. Listen, what problem are we solving? 80% right now of homeowners who want to move, they feel like they are stuck, right? So it's a seller tool too, because a seller could feel stuck because they can't afford to leave their current house. They got a super low interest rate. We call it rate lock. I know so many of our agents are running into that, and we hear it on a reoccurring basis. AssumeList is the answer to that problem. It helps you solve the situation that those clients are in. It helps them buy today at a same or lower interest rate than they already have. Incredible opportunities exist for them. Now, what do they offer? Like, what does it mean? What's this all about? Well, number one, AssumeList offers the ability to find assumable listings and off-market properties, right? That in and of itself is a huge deal. Number two, they have transaction management team that closes assumptions faster than like anybody else on the market. I mean, they get these things done lightning fast. Number three, their lender partners help them to finance the equity gaps. And we brought the team with us today. They're going to talk about what equity gaps mean and kind of how it all comes together. Some of you know, if you tried to pull off an assumable rate mortgage before, it's like there's these things called equity gaps. We're going to show you how this team handles that like experts. Also, number four, comprehensive learning center with daily training for agents, for buyers, for sellers, heck, for team leaders that want to get your teams into this and get fired up. It is incredible to be able to take advantage of some of this stuff. And what does it all mean? It is a competitive edge for you. That's the idea. You know, at EXP, we want you to have the competitive edge when you're dealing with the buyer, when you're dealing with the seller, when you're competing against other brokerages or teams that are trying to recruit agents. Listen, we want you to have the competitive edge, and that's what this program is designed to do. 99% of agents have never completed a single assumable mortgage. 99%. You get to stand out and be that top 1% real estate professional that knows what's going on, that knows what challenges buyers and sellers are up against and how to level those challenges to the ground. And so you're also giving yourself a competitive edge because the buyer demand is so huge, but most agents just don't have the knowledge to know how do they pull off this with competence and confidence in one of these transactions. And we're going to make sure that you walk away with that today. Also, you're able to activate your EXP sponsored subscription, and that's going to put you ahead of the other 99% of those competitors that are out there. And your expertise also helps attract and again helps you to recruit. And so I've said enough. I just want to get you fired up. I want to kind of salivate y'all so that you know what is coming. But I brought the steak with me. I brought the steak, the potatoes, the everything else. I'm just here. I'm like the soup or something. I don't know. Maybe I'm a breadstick. But I brought the steak. I have Mike. I have Nora with me today with the with the AssumeList team. They are here. They're going to pop on and listen. Who's got the steak? Who's got the potatoes?
Great question. Hey, I'll go with the steak. I'll get the steak.
Mike got the steak.
I've got the potatoes, but I've also got the salmon. Okay,
Let's go. All right, I'll be back.
Awesome, Tony.
Take it away.
Wonderful introduction. I mean, you knocked it out of the park for us. Certainly. You hit a lot of the points. So, Mike Lorino, founder, CEO of AssumeList, real estate agent. I'm based out of Northern Virginia. Covered the DC, DMV market, DC, Maryland, Virginia. We got a lot to talk about today. We're so excited to be here. We're very grateful for EXP to partner with us. One of the very few kind of forward-thinking brokerages nationwide that is even thinking about ways to create massive opportunities for buyers and sellers. So we're very excited to be part of the EXP experience and training this and giving this opportunity to the agents out there. With me today is Nora Simpson, my head of education, head of training. Nora has a wealth of experience, nearly 20 years developing a proprietary neuro-based science approach to sales, which she has multiple books available today on Amazon. We're not here to talk about books, but I just say that just to show that, Nora is really a professional in this space as well. So Nora, what do you think? Let's jump right into it. Let's go right in. Last thing, we're going to talk through all the material today. At the end of the training, you got to stay to the end. We're going to give you a registration code that is good for today that allows you to register on AssumeList completely free of charge. So part of the partnership is, as EXP is sponsored your access to this paid platform, zero cost to you, no money. You'll have full account access as if you are a paying subscribed agent. We'll cover what that all includes, but just know that access code to register will be provided at the end. So Nora, over to you.
All right. Well, I'm super excited to be here. Hi, everybody. Thanks, Tony. Thanks, EXP. Thanks, Mike. Always a pleasure with you, my friend. So we're about to show you a way that you as a realtor can truly be the answer to a prayer. It's true that 80% of homeowners who want to move are afraid of the big high interest rates and how they're growing every day. And part of the reason for that is that 70% of homeowners in the United States have an existing interest rate below 5%. So it's really hard to justify trading their sub 5, even sub 3% mortgage for a new loan at 6 or 7% or higher. And when we talk to new home buyers, a lot of them feel completely priced out of the market. So with your new EXP subscription to AssumeList, you will be one of the few agents in your market who can offer an option that actually solves this affordability challenge. Mike?
Thanks, Nora. Yeah, so let me just say a very strong statement here. What we're going to talk about today is not theory. This is not an unproven technique. This is something that I do every day in my business, and there's hundreds of other agents. I wish I could say thousands, but certainly hundreds of other agents around the country have literally doubled their production volume simply by introducing assumptions as part of their toolkit. My production volume from 2024 to 2025 doubled, and I'm going to double again in 2026 simply by being known as an agent who has the ability to help buyers buy homes with sub 3% interest rates. 1 hour ago, I was at the title company's office. I closed on a property for an active duty military couple, purchased about $1 million home with they got a 2.25% VA assumable mortgage, 2.25%. When right now interest rates are, I don't know what they are, 6, give or take. So they're saving well over $1,000 a month on that assumption today. They could not be happier. They were literally almost in tears at the end of the transaction and the closing because they couldn't believe it was actually true, that they actually did it and the home is theirs. That is how powerful this is. And you better believe that they tomorrow will go start sharing the news with all their friends, families, colleagues, coworkers, that, hey, we just bought a home with a 2.25% interest rate. Half the people they talk to won't even believe them. The ones that do will say, how? And they're going to say, reach out to Mike Lorino or, whoever, wherever market you're in. It is the most powerful referral opportunity that you can, have, because the people that you support in this transaction will literally swear by you, and they'll be your, they're forever your, best agent in the world. So Nora, let's jump right into it. Let's start off by covering the 4 reasons that 99% of agents have never done an assumption. Even though we all know buyers are looking for house hacks and lower rates, right? So this is not a demand shortage, but there's a reason that agents aren't doing assumptions. So let's jump right in. I'll go ahead and I'll share my screen, and we'll cover. We call them the 4 pain points, right?
Absolutely. So as Mike gets his screen shared, I'll start talking about it. And Mike's absolutely right. I lead a daily training 5 days a week that's free and open to the public. So all of you are invited to come to that training whenever you like. And if somebody misses today, because the code is not going to be recorded and it will expire at midnight tonight anyway, because we are so passionate about making sure we're training agents to engage in all this. So let's talk about the 4 pain points. So the first thing that is often really hard for agents when someone, when a buyer comes to them and says, hey, I've heard about this assumable mortgage thing. I've been watching TikTok videos, right? Can I get one of those? And the agent says, oh no, they're terrible. You shouldn't go near it. Don't believe everything you hear on the internet. And it's so hard to find them. And that's one of the reasons that my beloved CEO friend here, Mike Larino, built AssumeList as a search platform. That was the first part of AssumeList that got built before the Learning Center, before everything else that we'll show you today. And we are able to show something like, I believe it's 40,000 active listings that have assumable VA, FHA, and USDA mortgages across the 55 MLSs and 26 states that we cover. And just to be clear, those listings are changing all the day, every day, because we have an integration with these different MLSs. We have over 4 million off-market properties with assumable mortgages below 5% of, for mortgage rate. So all VA, all FHA, and all USDA mortgages are assumable. Any home buyer can assume any of those 3 mortgages. Any investor can assume a VA mortgage in a very particular situation we'll talk about a little later. So there's a lot of myths and misconceptions, but the number one thing that people need is they need access to the data. And that's what Mike built with this amazing set of algorithms that he designed. And I'm so proud to be part of that. So that's number one.
Can I just jump in? I want to add something.
Sure,
You covered it really well. There's one thing I want to add, and that is there is a misconception. It's kind of obstacle 1 and obstacle 2 tied together in this regard.
Yeah.
There's a misconception that people, whether it's an agent or home buyers, can find homes by just running a keyword search, whether it's through the MLS or on Zillow or, pick your website, and just run a keyword search to find homes for assumable mortgages. And I'll ask you, is that truthful? Can they do so?
Well, I like to test it every couple of weeks. And on average, what I find is that between 5 and 7% of the assumable homes that are available in a marketplace are actually advertised as assumable on the MLS or are searchable as assumable in Zillow or Redfin. Everything else, so 90 to 95% of the rest of the assumable possibilities are not advertised. The listing agent may not know it's assumable. The seller often doesn't know it's assumable. This is brand new territory for most people in the real estate world.
Great, thanks. And that's why AssumeList solves that problem, because we give you access to all homes with assumable mortgages, even ones where the listing agent may not have known to include a comment in the remarks section, but those are available to you as well. And that's why the keyword search technique is really not a viable way to find these properties.
Yeah, and I just want to, there's been a couple of questions in the chat that are relevant to us right now. So just to be clear, if there was a refinance of a VA, FHA, or USDA mortgage and it stayed VA, FHA, or USDA, it is absolutely assumable at that refinanced rate. So yes, yes, people who asked about that. If you have a VA, if your seller has a VA, FHA, or USDA mortgage that has been refinanced to a lower rate during the low rate years, and it's still VA, FHA, and USDA or USDA, then yes, that mortgage can absolutely be assumed. So that's one of the questions. The other question was, is this only for VA or can it be conventional? Very few conventional mortgages are assumable. However, all FHA and USDA mortgages are assumable, not just VA. So basically all government-backed loans. And on a different call, we'll give you the sordid history behind how that all happened. Mike, let's go on to number 2. So misconceptions in the marketplace. A lot of the misconceptions in the marketplace that we've, are ones that we've covered just talking about how hard it is to find assumables, but there's plenty of other misconceptions. Oftentimes people think they think assumables are subject to, they are not. Any assumable mortgage, in order to be assumed, has to go through a federally guaranteed, legally regulated process where all seller liability is fully transferred to the buyer, and the seller walks away completely free and clear with no impact on their credit ever again, no matter what happens to that mortgage in the buyer's hand. So there's many more misconceptions, and we'll cover a few of them today. But we have a learning center with fact sheets and videos and documents and contract documents and scripts that we'll show you in a little bit. And again, I will repeat, I lead a daily training Monday through Friday at 11 a.m. Eastern, 8 a.m. Pacific, because I am constantly teaching people all this new information. It's a lot of new information, but it will distinguish you from 99% of your competition. So we always invite you to come on those daily trainings. We don't usually get more than 10 or 15 people. So you'll get a chance to, put on your camera and chat with me and ask me all kinds of questions. I love answering your questions. We are so here to see you succeed. Obstacle number 3, cash gap financing. So there is the price of the home today. There is the amount of the mortgage that the person took out or refinanced, from, 5-6 years ago. And generally the price of the home is a little bit higher, not just of the price that the person paid or the mortgage they took out at the time. It's also generally a little bit higher than the remaining balance. Because when we do a mortgage transfer, a mortgage assumption, obviously, we're transferring the remaining balance to the new buyer, right? So the distance between the remaining balance on that assumable mortgage and the home price that the seller wants, right? That's going to be an equity gap, which we call the cash gap. Because until Mike and I went out and found some wonderful lenders who can actually provide extremely low rate for today's market, extremely low rate second mortgages that allow people to close those cash gaps with only about 10% down, right? Until we did that, everybody who did an assumption had to come up with the cash between the home price and the remaining balance on the mortgage. So we are so happy that we have extended the life of assumable mortgages. And we find that even when people take out $100,000, $200,000, $300,000 in a second mortgage, if the percentage that they're taking out is smaller than the amount that the remaining mortgage balance accounts for in the price, they're still going to save an extraordinary amount of money. And in today's market, sadly, even if the cash gap is a 60% cash gap, I've seen times where people still save $500 to $1,000 a month in mortgage interest.
And I'll demo that, Nora. I'll cover that when I give a quick little overview of the mortgage calculator on the search platform.
Absolutely,
We have an example and how that works.
So we've built you guys a lot of cool tools to make all of this easier, but it does take a little repetition and learning before you feel like you're a fancy expert.
What's obstacle 4, Nora?
What's obstacle 4, Mike? Obstacle 4 is servicer resistance. And let's be honest, if you knew that somebody was going to legally take $400,000 out of your pocket over the next 20 years or 25 years, and maybe you could charge them $800 as an assumption fee, you'd probably fight as hard as you could too. Because all that money that your buyer is saving, that money is money that the banks think of as a loss, right? Because they want to get rid of these assumable mortgages, they want to get rid of these low rate mortgages, and they want to get those 6.5% and 7% mortgages because they make more money on them, right? And unfortunately, some of the horror stories you have heard about people feeling very overwhelmed and confused about how to move forward in the assumption process and how to do it in a rapid way. I'll just say, people who don't work with us to manage those transactions, I have seen a lot of them after they've struggled for months come to us and say, we don't understand what's happening. With our transaction management team, we have never had a turn down, and we've closed hundreds of these assumptions, and we've never gone longer than 60 days, which sounds a little longer than a normal close time, but compared to the horror stories you'll hear about 4 months, 6 months, or longer, right? 60 days is nice and reliable and workable for sellers, for buyers, and for agents. So we're very proud of having built that out. And that is a fight we fight every day, making sure that servicers follow the law.
And just to caveat that, most of our assumptions actually, we have built such a strong relationship with all the major servicers nationwide. We have all the direct contacts. We support agents nationwide. Usually we're able to get those closing timelines down to closer to 45 days.
For sure. So. And Debbie asked if, we could help her find a VA to VA buyer for a VA assumable loan, VA assumable home she's selling. Debbie, I invite you to join us for one of our Q&As, because we have a whole service that we offer sort of separately that involves connecting you with potential buyers. Juliet is asking about listing brokers not willing to wait for the loan to be assumed. I know, Juliet, that there have been times where that is true. In today's market, especially when homes are sitting on the market for 60 days, 90 days or longer, I find that listing agents are very open to doing assumptions if it'll help them sell. Cheryl is making a really good point. This is why we do a whole primary plus secondary strategy. Cheryl says she was involved in an assumption, and 88 days in, their buyer was deemed as not able to close. And we've heard these horror stories again and again. This is one of the reasons that we work with our preferred lender so closely, because we get our buyers for the transaction management, we get our buyers pre-approved for both primary and secondary, and we put them through a battery of tests, if you will.
Question. We validate that the buyer meets all of the financial qualifications before the application is even submitted to the servicer. So we know effectively in advance, short of them losing their job or having some other, significant change in their financial picture. But as long as nothing has changed, we'll review them and qualify them on the front end before the application is even submitted. So you don't waste any time. You'll know ahead of time that they meet the qualifications and that loan will be approved.
Absolutely. So now we're gonna switch over. I'm seeing credit score questions. Believe it or not, it's not as high as you would think. I believe it's a 640, but I don't want to be quoted on that. It depends on the situation. Mike, will you switch us to dashboard for me? Thank you so much.
Can you see the dashboard now?
Yeah, I can see the dashboard.
Great.
And yes, Satish, you can absolutely purchase these as investments for your own portfolio. Any investor can purchase a home with an assumable VA mortgage if the veteran is willing to leave behind the portion of their entitlement that is tied to the property. John says, statute says 45 days for assumptions from application to approval. Yes, but the tricks we've seen, I won't say who plays them. The tricks we've seen include delaying the application receiving interview by months. We've seen so many tricks. I'm not going to spend time on this recorded call explaining to you all the ways that you will run into obstacles that you will not find described on the internet, but I'm happy to go through them in a daily training. And the link to the daily training is homes.assumelist.com/learn. You can I put it in the comments there. But Mike, if maybe at some point you'll show it like on the screen at some point. Okay, so dashboard. So once you've signed into your EXP sponsored AssumeList account, you're going to be right on your dashboard. On your dashboard, you're going to be able to track your saved searches, your saved properties. My favorite thing about AssumeList is that we allow you to create client sub-accounts. So your clients, and I always advise people, do this with people who've actually signed a buyer agreement with you, right? Your clients can search our data totally free. They have to pay money. They have to pay us money if they want to search without your help, right? So we want them to work with you. We want them to be running their own searches, and you can go to their sub accounts and you can look at everything they're doing. You can see every search they run, every property they look at, every property they put a heart on or comments. Then we have the Learning Center, which Mike is going to open shortly, that has, the fact sheets, the guides, the videos, scripts, documents, so much information. And then, of course, here is yet another way to get to the daily training for subscribers and guests. But if you have any trouble getting in, here is the link again, homes.assumelist.com assumeList.com/learn. So I'm putting it in again, and John's beating me to it. I love it. Thanks, John.
Let's go into the Learning Center, Nora. What do you think?
I love it. Let's go to the Learning Center. So here we are in the Learning Center. So I just want to show you a couple of the fact sheets and guides. We actually started. You want to scroll down to fact sheets for me? Rhiannon, we haven't actually given out the registration code yet. We will give it out towards the end. So we actually started with the solving the 4 pain points of assumptions. Mike, will you click download for the solving the 4 pain points of assumptions, just so people can see how easily it opens up? So this is the document we started with. This is all downloadable and shareable, right? Every single document.
Download any one of these that you just hit one button, boom, it's saved on your computer. And I use these, and I oftentimes share these documents with agents. If I'm representing a buyer, for example, and I want to educate a listing agent or potentially a seller on assumptions, usually I'll start with busting myths about assumptions. We're going to quickly talk about that. But the really cool one here is the assumption fact sheet, and it covers a lot of the misconceptions about assumptions, how it works, who's eligible, is what risks the sellers, how does the VA entitlement work, what are the scenarios, the common scenarios in which veterans often leave their entitlement for non-veterans to assume. So that's in our assumption fact sheet, and that's usually one of the most effective and informative documents, one-page documents. I'll just quickly open it, that you can share with other agents that you're in communication with about assumptions, that will educate them and their respective clients, that helps you with those transactions.
Absolutely. And we find that about 20 to 25% of veteran sellers are in the positions, in the situations that we describe as reasons why people are usually, available and open to leaving behind entitlement. We find that 20 to 25% of veteran sellers can do it. And all FHA sellers, every single one, can agree to the assumption and lose nothing. Oh, it's also really important for people to know that if you're ever thinking about an FHA loan for a FHA assumption for a home buyer who makes a lot of money or who has a lot of assets, there is no FHA income limit. Sometimes FHA loans are available specifically through special programs that have income limits or asset limits, other things like that. There is no limit. There is no, low income requirement for doing an FHA assumption. So really anyone who's creditworthy can assume that FHA low rate loan.
Anything else you want to cover? Videos here, Nora?
Yeah, would you scroll down to videos for me? And Tanya, yes, we do, and we'll talk about cash gaps next. We'll talk about how we help people with cash gaps. So we have a bunch of videos. These are all YouTube videos, so you can just copy and paste the links right from YouTube. So you can send these videos to other agents. You can send these videos to buyers and sellers. This is all ways we support you in educating your marketplace, because you are probably the first person among most of the people around you to understand just how powerful this can be. So you're a category creator, you're a market innovator. We've written you scripts for how to talk to your network about assumptions, like how to get people. There are people right now who have not told you that they're thinking about selling because they don't think they can, and they don't want to waste your time or get you too excited. But they are thinking about it. And if you told them there's a time-limited way for you to get access to 2.5% mortgages for them, they'd be over the moon excited. So that's part of the magic here, is like really taking the risk and getting outside your comfort zone and getting in touch with lots of people in your network to let them know you have access to this. Here are documents and forms that will be really useful for purchase agreements and contracts that you enter into.
For example, a lot of people always ask, well, how do I know that my seller is going to be released from liability if my seller accepts an offer for the buyer to assume the loan? Well, very simply, there's the VA document right here that literally covers the language on the VA form. So we give it right to you so that you have the exact language that you can send out to a listing agent, for example, that gives you, the government language that you will be released from liability on the loan during a VA assumption. So these are sourced. All of our information, all the knowledge that we have and the experience that we've achieved over the last few years is literally rooted in Nora says federally guaranteed program, regulated program. It is truly in different forms of the U.S. code and federal code and different laws. With the VA, of course, it's all through the Department of Veteran Affairs. So this is all mandated by Congress, right? This is not some little niche, workaround. This is truly a government guaranteed program. That's why every single VA loan, every single FHA mortgage and USDA mortgage is assumable without exception. Lenders and servicers are not allowed to say they are not processing or will not, approve a VA or FHA assumable mortgage. The only scenario in which they could deny it is if the buyer isn't qualified, which we, have some mechanisms in place to know that on the front end, which is why 100% of our transactions get approved.
Absolutely. So we've got some wonderful questions in the chat. I think some folks are chomping at the bit to get logged in. I want to be clear, guys, everything you see in the Learning Center, you will have access to that Learning Center when you are logged in. So all the documents, all the videos, it's all yours now.
All right.
And your buyers can't see it. Only agents can see it.
Only agents can see it. Yep.
So Mike, why don't we go to property search real quick? Because what we can do is we can show a few cool filters and we can show how the cash gaps work, both in the data and in the mortgage calculator.
Before we jump in there, I just want to do spend a second on here. If you go to AssumeList.com/areas-served, you can see the locations in which we currently have coverage. Unfortunately, we're not in all 50 states yet, but what we do cover is about 80% of the nation's assumable mortgage market in the 26 states or so in which we cover. You do see Washington State on there. We're not technically approved in Washington State. We're hoping to have that launched here in the next few weeks. But generally speaking, anywhere that says that's a blue shadowed state, we cover. And if you click on any one of those states, it'll switch to kind of this view. So, our access to the MLS is predicated on approvals. And if you're familiar with, there's a lot of compliance regulations with getting MLSs to provide us with access to the data. So as you scroll through, each state or area, like some states we have the entire coverage, like Maryland, Delaware, and others. In other states we cover a portion. So as you go through it, you'll see where we actually cover, and where you see these counties listed on the map are exactly where you could run a search and see assumable properties. So with that, let's go ahead and transition to the actual search platform. So when you log in, you'll see on the menu here, the button that says property search, pretty simple to go to. And I think for today, Nora, I'll just kind of do the quick demo here. Well, let's just go with San Diego. I think there's a lot of folks here in California, and San Diego is a really great market for assumable mortgages. There are a dozen or 15 or so phenomenal markets in the country where assumable mortgages really are truly a remarkable way to kind of help clients, achieve immense savings in states around the country. Just for the demo's sake, let's just go with San Diego. Now, in the search bar, you could search based on city, state, zip code. You can actually type in a specific property address. You can enter even an MLS number or MLS ID if you wanted to. But I usually just search based on location. So there's San Diego City. I'm just going to go to San Diego County. And the search bar is kind of keyword driven. So you don't necessarily have to spell out San Diego, CA. You can just type in SAN space D, and it will show you all the results that fall kind of in line with that kind of description. So you don't necessarily have to spell everything out perfectly.
Yeah. So we'll go to San Diego County. I just want to answer some of the questions in the chat. Once you confirm that the loan is assumable, every bank that services assumable loans is legally required to engage in that assumption. However, not all of them will tell you that they do it. We have had instances where people show up on my training and say, hey, my seller called such and such bank, and they said, theoretically, your VA mortgage is assumable, but we here at blah, blah, blah bank do not do assumptions. And then I say to them, that's funny because our transaction management team closed 3 assumptions with that bank this month. So let's just say there's some tricks, guys. There's some tricks out there. And then in terms of what types of banks do the second mortgages, very few, which is why Mike and I had to interview dozens and dozens and dozens of lenders until we found the one team that really does it and does it well. So we're very happy to offer that to you guys. So, so what Mike is going to show you now is he's going to show you how you can narrow your searches with the coolest filters. So let's go to the price filter.
Yeah, let me. I'll just kind of drive it, Nora, if that's okay, if you don't
Oh, go
mind.
for it.
And what we'll do is I'll just cover the kind of what is searchable and how it works, and then I'll pull open a few properties. We can see kind of what you get, what what information is available for assumable mortgages. So right off the bat, when we ran the San Diego County, so 620 properties came up and were displayed on the screen. So just in that one county, we have access to over 600 actively listed homes. Some of them are already under contract, others are still active status. But if you ran that same keyword search in San Diego, you're likely to see maybe less than 10% of those, probably 40 or 50 homes that are actually marketed as assumable, and you would lose out on the other 555 or however many the difference is. What's really cool is on the price page, so normally buyers are used to searching for homes, or even agents searching for homes based on price. When it comes to assumptions, searching by price is actually less relevant. What it's more relevant is the mortgage payments, right? Because ultimately a buyer is assuming the existing loan, they're assuming the existing mortgage payment. And as lenders qualify buyers, they qualify them based on debt to income ratios and what a borrower could qualify for or be able to apply towards a mortgage payment. So usually what I like to do is I set filters based on what mortgage payment a buyer wants to be within or what they can qualify for. And then you can run filters based on that. So simply by, cutting down or limiting some of these applying here, you'll see that the number of assumable homes starts reducing as we apply our filters. And in some markets, you'll have more assumable properties than others. So you just got to be mindful about how restrictive you are applying these filters. But the point is, mortgage payment is an option. You can filter based on cash gap. So if you have a buyer that wants to keep their cash gap tightened, maybe they have a certain amount of money available and they don't want to take out a second mortgage, by all means, choose a smaller cash gap. If they also, you can set filters based on the interest rate. So for example, if you want to keep it under 3%, set a filter for under 3%. So just based on, a $3,500 mortgage payment with a sub $250,000 cash gap with a sub 3% interest rate, we went from 600 homes to about 94, right? And they're all still displayed on the map. Let's just go ahead and I'm going to randomly pick a home. I'm not sure where we're going to go with this, but we'll just kind of do it in real time here. So this particular home in Oceanside, lovely area, is looks like a condo. So we'll see how the numbers pan out. We tell you the status as provided to us by the MLS. So we have a direct feed with the MLS. Generally speaking, it's about an hour or so time delay from when listings are updated in the MLS by the agent before they're reflected on AssumeList. It is not instant. We are working on an instant new technology that's going to provide literally seconds to maybe minutes. Right now, it's about an hour or so, give or take, depending on the MLS. And we have the address, we have the list price, and we have the cash gap amount. So how we calculate the cash gap is we know what the current loan balance is. Now, how do we know that? It's not publicly available information. We actually reverse engineer the mortgage within our platform that derives what the loan balance is. And you'll see there's a little I next to it, and it'll say the loan balance is an estimate. The loan balance is likely a little bit off, and usually it's a little bit lower. But for argument's sake, the loan balance you see here almost always is within 1% of the actual loan balance the home has. Usually like a mortgage payment or two is generally what we're talking about in variability. So we're pretty confident in that, and that's what allows us to have a high degree of confidence in the cash gap. Beyond that, we know what the loan type is. This is a VA mortgage, has a 2.75% interest rate. I'll come back to that in a second. And it has a 25-year remaining mortgage. How do we know that? Well, we know based on, again, public record data and certainly some other validation techniques. The home was purchased in this case, August of 2021. They did not refinance it. If they had refinanced it, a refinance date would be displayed. But based on that purchase date, it's just a simple, calculation. A buyer that would assume this loan is assuming a 25-year remaining mortgage. They are not taking out a 30-year mortgage. What that means is not only is it only 25 years left to either pay it off but they also have the first 5 years of interest. They're benefiting by the first 5 years of interest having already been paid. So a buyer is walking into this with a lower mortgage payment, but also a greater percentage of each payment goes towards principal rather than interest, right? We all know when you first take out a mortgage, the first few years of payments is like 95+% interest. In this case, it is more probably closer to a 50-50 for each payment that they make. We actually also provide you with the mortgage payments. So that is that's how we allow that search filter to work. And then since this is a VA loan, we also give you the initial loan amount, which is the amount of entitlement, VA entitlement, that is tied into this particular home. And why that's important, I'm going to cover below in this VA entitlement calculator. What's really powerful about the VA entitlement calculator, it's the only place that I'm aware of nationwide that will tell you immediately will tell you the amount of entitlement a seller has tied to the property, and will give you a calculation of what the seller's potential buying power is if they were to leave that entitlement with the home, which would enable a non-veteran or investor to assume the property, and what they have remaining that they can use to purchase their next home with their remaining VA benefits. And there is one of the misconceptions out there is, I often hear this from listing agents will say, I would never advise my seller to leave their entitlement because then they don't have it again. They can't ever use their VA benefits again. And that is patently false. If you've heard the term split entitlements, sellers can absolutely, or homeowners or veterans, I should say, can absolutely purchase multiple homes with their VA entitlement until they hit the threshold, the cap. And that cap is really predicated on the county in which they're purchasing. All of that is built into the platform. So we tell you what the amount of remaining benefits or VA entitlement a seller would have. So in this case, this owner could leave their entitlement to allow a non-veteran to assume this really wonderful 2.75% mortgage. And that seller would have the ability to buy another home at $922,000 with their remaining benefits. And this assumes they're using, a portion of that proceeds towards their next home purchase, which most sellers do anyway. And we give that to you in a really cool graph here. And then there's even a PDF summary that you can download, and it will give you a really one-page summary that you can share with a listing agent to help them and help the seller understand how the math actually works. And what's cool about this is most lenders struggle with even trying to calculate this on their own. So if you go to a lender, or if the listing agent says, well, hey, I'm going to have my client contact their lender to see what the remaining entitlement is, they may not even be able to get that question answered. A lot of lenders struggle with trying to calculate how VA entitlement works, what's already tied up, what's left. We give that all to you in this VA entitlement calculator.
Absolutely.
The other cool thing, do you want to say something, Nora?
No, Mike, you're doing so great. I'm just answering questions in the chat. You keep going, man.
Go for it. All right, I'm gonna chug along here because I want to cover the stuff we're talking about here is the knowledge that you gain by using AssumeList that 99% of the market out there just does not have, can't get it, don't know that they don't know where to go to get it, or that they just don't. There's no way to kind of explain it all without it being all packaged together, and that's what really we try to do with AssumeList. In this particular case, the listing agent, I'll give this listing agent credit. They mentioned 2.75% VA loan in the property remarks. This is one of those, approximately 10% or so of listings of assumable mortgages. The listing agent included it in the remarks section. So this agent did a great job. When that happens, we automatically update the interest rate and reflect that on the actual summary at the top of the page. If that wasn't the case and that wasn't in the remarks, then our software would calculate it, and it would be usually within 0.25%. So maybe it would say like 2.85 or 2.77, or sometimes we get really lucky and we guess it right. So just know that if it's in the listing and you see it here, that is the actual number, and we update the mortgage payments off of the actual interest rate if it's provided to us to really refine this to literally to the dollar. So pretty accurate in terms of mortgage payments if we know the true interest rate. In this case, we do. All right, we're going to get to one of the most important parts of this screen of any assumable mortgage is break it all down for me. Where are the savings? How does my buyer make a decision whether it makes sense to pursue this assumable mortgage or not, right? And let's cover that off to the right of every single assumable property, whether it's VA, FHA, USDA. We give you this mortgage calculator, this assumable mortgage calculator, right? This is different than the VA entitlement. The entitlement calculator covers entitlement. This covers mortgage payments. So right off the bat, we know it has a 2.75. We have the interest rate. The mortgage payment. I'll caveat, the mortgage payment you see on the screen is generally principal, interest, and taxes, PIT. It by default does not include homeowners insurance because, as we know, homeowners insurance varies greatly across the country. Some properties are not, beachfront. Some, are in flood zones. Some have low interest rates. Some, where there's a lot of, flooding or hurricanes or whatever. There may be different rates. So there's no way for us to kind of assess that. So what we do is we give you the ability to just edit the mortgage payment and pencil in. If you happen to know, this home was probably, $150 a month for a mortgage for homeowners insurance. Drop that in, and now we have a true PITI, so principal, interest, taxes, and insurance, and it automatically updates the number below it, which is a comparison. If this homeowner were to do an assumption, and how much would they be saving per month compared to taking out a new loan? And that's where this really is powerful, because without really pressing any buttons here, we can see that a buyer would save about $650 a month on this roughly $479,000 condo in Oceanside, California, by doing an assumption relative to taking out a new mortgage. And you'd say, Mike, and the software will default. It will see where it says 6.41%, and that's based on conventional rates. With an average credit score in that local market. Rates do vary across the country ever so slightly. But if you were to say, well, Mike, my buyer can get, a 6.25% on a new loan, by all means, just update that. And now it'll automatically reflect that change in mortgage payment based on a current mortgage. And you'll see the savings adjusted based on the comparison interest rate that you applied to compare the new loan versus an assumable. And in this case, it's about $600 a month, assuming they can get a 6.25 or whatever rate you feel is applicable, comparing it to a new loan.
And I just want to say, Mike, so Joe Reimer just asked, the potential monthly savings is great, but how does that flesh out with your lenders who cover the cash gap? So this is what Mike is about to cover. He's going to show you what
happens. So let's do that now. Now this home has, I would say a not a huge cash gap. But it's also not a immensely expensive home. Obviously, the numbers get bigger if it's a $1 million property with a $300,000 cash gap. But let's just say in this particular example, a potential buyer wants to put an offer in to purchase this home. Right? They love the interest rate, but they don't have the $92,000 in cash gap to cover that difference between the purchase price and the current loan balance. But they do have 10%. Right? The kind of the magic number is 10% down. Right below that calculator, the mortgage payment display is the down payment calculator. Now you could customize it and choose a specific dollar amount if they only had a certain number or they wanted to use a certain number. I usually just hit this button called 10%, and boom, right off the bat, just one button, it calculates what 10% of the purchase is. And hopefully it's legible. Let me just zoom in a hair more. And 10% down is $47,900 relative to the purchase price. And they would then finance a second mortgage for the difference. So in this case, relatively small, $44,000 second mortgage. We automatically calculate what that mortgage payment would be using, one of our preferred lenders would be if they were to take out that second mortgage. And that's not all. With that now second mortgage payment known, we up above update the interest that we call a blended interest rate, which is taking the interest rate on the assumable home, that 2.75, blending it with the second mortgage rate that they would get by taking out the second mortgage, And we display that. So effectively what we're saying is, if the buyer were to have that same mortgage payment, their equivalent interest rate would be in this case, 3.6%. Why that's relevant is because even with a second mortgage, that buyer is still getting a substantially lower interest rate than taking out a new loan at today's rates. So hugely beneficial. And then we do the same with the mortgage payment. We combine the primary mortgage payment plus the second mortgage payment, and we show you what that total payment would be. And then we compare that total payment with the assumable mortgage to a new loan with the same 10% down, right? It's always an apples to apples comparison. So the same 10% down would result in this buyer still saving about $568 a month with using a second mortgage at 10% down compared to taking out a new loan at 10% down. So really powerful way to, in literally seconds, calculate whether or not a home is viable for doing an assumption. And not all homes are, right? There are some properties out there, as Nora mentioned, where the cash gap may be 60% or more of the loan balance, of the purchase price. So effectively in those scenarios where the cash gap is so huge, the savings in the remaining loan that would be assumed is so small, there's really not enough savings to justify doing an assumption. They're effectively just buying the home outright for cash. Or if they're taking out a second mortgage, the interest rate on the second mortgage, kind of offsets or eliminates the savings that they would achieve. And at that point, you may just be better off taking out a new loan. And that's what this calculator helps you answer. It will show you at what point does that assumption no longer make sense.
Absolutely. Mike, I think we're getting close to the end. So I think what we should do now is give out the registration code. And if you could bring people to AssumeList.com and show them exactly where to insert the registration code, because not everybody is as great with tech as you are, right?
That's good. That's good. And you're answering questions through the...
I am. And while you're doing that, because you won't have to say many words. So everybody go to AssumeList.com. So while Mike is doing this, where he's going to share his screen, he's going to share the AssumeList.com.
I need to post the code in the chat, don't I?
Well, I would say let's go to AssumeList.com first. And this code will expire tonight at midnight. So please sign up now or later today. Do not wait. If you do not sign up today, no problem. You can come to one of my daily trainings and you can get a new code at one of my daily trainings. We are just so committed that you're going to use this tool with knowledge, right? Because otherwise, messy stuff happens.
Right.
So Mike,
so let me share my screen, and I've got the new page up here. So if you all go to, and you can see my screen, Nora.
I can't see your screen yet.
Let's see here. Does it not show?
I think you have to present.
It says it's sharing. Not able to. Let me try. Let me just do one more way here.
Okay, I bet it's going to work this time. While Mike is looking for that, Sharon, if you want more counties added in Missouri, you got to come to a one-on-one training, and we have to actually talk offline. Not one-on-one, but the small daily trainings. We should talk offline because that's a complicated. Let me just say, guys, like Mike and I have both had to bleed from multiple cuts and wounds for each of these MLSs to come on. It has not been easy to build this thing, but we are mission driven and committed to serving you. So I'm just going through some of the questions. One of you asked about LTV, loan to value with the second mortgages. So while Mike is getting all this together, I want to say that we generally recommend that your buyers come with 10% down. Why? Because with at least 10% down, that's when those low rate second mortgage, those low second mortgage rates get unlocked. If your buyer can only bring 5% down, there are second mortgage options if they only have 5% down. Unfortunately, the second mortgages available with what's called a 95% loan to value or LTV are going to be much higher interest rates, like higher by 3 percentage points. So that's going to eat away at the savings. Once in a while, we see that somebody putting just 5% down is still going to save $400 a month or something. And it's remarkable. But generally, we don't want you to go call all your broke friends, right? Who are like, oh my God, I can't afford anything. You want to call people who just don't want to make bad financial decisions, right? Because it doesn't make sense to leave behind a 3 or 4 or 2.5% mortgage for a 7% mortgage. That just doesn't make good sense, right? Good, smart, qualified people don't want to make that decision, right? So unfortunately, assumptions are not a cure for poverty. I'm a big bleeding heart. I want to cure poverty in the whole world. They're not a cure for poverty. They're not a cure for people who can't afford a new home unless they're using a brand new VA loan with no money down or a brand new FHA loan with 3.5% down. But they are an incredibly powerful strategic tool for you to light up your network with excitement.
Nora, are you able to hit the homepage? I wonder if there's so many people hitting it right now that it's lagging.
I wonder. I don't know. Let me see if I can do it. Hold on.
I'm going to post it in here just the same. So for those of you accessing AssumeList.com, at the very top you'll see a button that says Get Started. And when you hit the Get Started button, it'll do a drop down that says I have an EXP registration code or EXP registration. A screen will pop up, and I'm going to paste this in the chat right now. And that code, TH16J7, N as in Nancy, B as in Bravo, will allow you to proceed, and then you'll be able to enter in your, sign up and register and create your account right then and there. It won't ask for a credit card. There won't be any payment information required, and you'll have the ability to register right now. And if it's not letting you in, it could be that we've saturated the server with as many people on this.
I think we weren't prepared for 700 of you to log in all at once.
Yeah. Yikes. So I don't. Yeah. So we'll double check that as soon as the StreamYard is over. If we have to delay the code and make it work to tomorrow, we'll make sure everybody has an opportunity to register. Thank you so much. Let's see. Anything else we want to cover right now before we wrap up?
So there's a few things. So I want to make sure that I have put into the chat one last time the daily training, homes.assumelist.com/learn. Also, if you go to assumelist.com, you'll see a picture of me with shorter hair, no glasses, and the lines on my face when I was in my 30s, not my 40s. You'll see a picture of me, and you'll see a little box that says "Want to ask a real person real questions? Register here." Click that box, and that box will also take you to an AssumeList.com. To the registration page for our daily training. Our daily trainings happen every day at 11 a.m. Eastern, and that's also 8 a.m. Pacific. Who's the young lass? Oh yes, she was me. She was me. I also, so the code, so people are asking for repetition of the code. The code is on the screen right now. It's capital T, capital H, number 1, number 6, capital J, capital 7. Capital J, number 7. Gosh, my brain is really mushy right now. Capital N and capital B. And it's right on the code. Cheryl says it's not working.
Yeah, I'm aware. My team is looking into it. I think I wonder if Cloudflare
we've crashed the system.
thinks that there's an attack or website attack because
I wonder.
Hundreds of people hit it all in the same second. We are on enterprise grade servers. Trust me, it's all AWS backend architecture. So I just wonder if it was more of a false flag or false report. Maybe Cloudflare thinks we're getting attacked, and so it temporarily shut it down. We will. It will be up and running shortly. We will, if we need to extend the code, we will make sure everybody has an opportunity to register. AssumeList.com, top of the screen, you'll see a button that says Get Started. There'll be EXP registration page where you will just enter that code, and you'll be able to register or start using it right away.
Absolutely. And Mike, you're cool with me posting the support email address, right?
Yes. Yeah. Support.
Okay. So please, guys, if you have further problems or questions, and for some reason you can't join me for the Q&A at 11 a.m. Eastern, Monday through Friday, please do email us at support@assumelist.com. Okay. And it'll probably be me, Mike, or one of our teammates who writes back to you. And Kim, just so you know, even if your registration code Mike will extend it by a day for tomorrow, but even if the registration code expires, we give out a new code for EXP agents every day on the AssumeList trainings. Okay. And if you contact us at support@assumelist.com, yes, Stephanie, there is a link. Here is the link. The link is homes.assumelist.com/learn. What does the promo code offer you? Great question, Justin. The promo code offers you a totally free access for as long as EXP maintains this this partnership with us, totally free access to the agent subscriber account. So the agent subscriber account includes, it usually costs $79 a month, but it includes full property search for all 26 states that we cover. It includes 5 buyer sub accounts. It includes the entire learning center. It includes a mortgage calculator on every single property. It includes all of the off-market property search in, so you can search 4 million off-market properties with assumable low-rate mortgages. It includes the ability to use our off-market mailing campaign feature, though you do have to pay per piece of mail if you decide you want to use that. The code gets you your free EXP sponsored registration or your free EXP sponsored subscription for as long as EXP maintains this relationship, which we hope will be a very long time. And yes, we love Gary and Jennifer Meek. Glad you mentioned them. They've been absolutely crucial in getting all this moving and grooving. Stephanie, did you get the link for the training? Hopefully she said yes. Jennifer's asking, this is not for second home buyers. So here's what you need to know about people buying second homes. You cannot purchase an FHA. You cannot get an FHA assumption through if it's for a second home. However, if your home buyers are willing to move in to the FHA home and turn their existing home into a second home or turn their existing home into a rental property, for instance, they can absolutely do that. And we've had buyers that did that, right? They just have to occupy the property for the first 12 months of ownership. For VA assumptions, when the veteran is willing to leave behind the portion of their entitlement tied to the property, which is, we find, 20 to 25% of the time, right? And there's lots of information on this on our learning center, and lots of times you'll hear me say it in the AssumeList daily training. When the veteran is willing to leave behind that portion of their entitlement, then that home can be purchased for any reason. It can be a second home. It can be an investment property. It can be something that someone does a renovation on and turns into a co-living investment. There's a million different ways that that home can be used, as long as it is transferred into the, as long as it is assumed by a person and not an LLC or a trust. So I hope that answers your question, Jennifer. Sorry for the technical issues, but I promise you we'll get ourselves back up and running very, very soon.
It's actually, our servers are fine. Cloudflare thought it was a DDoS attack, I think is what's happening. So they shut down access to AssumeList because 500 computers hit us at the same time. And so it thinks there's attack. So we're just trying to get that limit lifted. So, or the block lifted. So our servers are.
And I just want to correct something. Is the live stream stopped?
No, we're still live streaming.
Okay. So I just want to correct something. Cheryl wrote that it's $7 per month. Otherwise, it's not. It's $7 for the first 7 days for the agent subscription. And then after the first 7 days, it's $79 a month. So it is absolutely never $7 per month. That is never what it is. But I understand that if you're looking at assumelist.com/pricing, it is easy to see that $7 figure in the agent column and go, oh, it's $7 per month. It's not. Just read the text under the $7. But we do like to give agents an opportunity to try it out for a week, right? Before they commit to the $79 a month.
Here's what I've done. I've automatic that same code. It's going to be valid for 48 hours now. So I just updated it. So we have today and tomorrow. We'll have this up and running later this afternoon. So I can assure you that the same code will work at least for the next 2 days, today and tomorrow. So through the end of Friday, that same code will work, just to make sure that people have enough time to register. Apologies for this. This was not planned. But,
obviously.
but we will have this all cleared up, and everybody will have access. And we're looking forward to having you on the platform, and certainly join Nora in subsequent trainings if you have specific questions about a particular transaction or scenario, or if you want a clarification on certain rules or policies, or if you're having an issue with a certain lender. We are absolutely here to support you and help you. We've got our entire team of folks that are available. We work 7 days a week to ensure that we are giving the best possible experience and helping you grow your business and support your clients.
Absolutely. And so just to answer a few more questions, yes, free for all EXP agents. And no, Helma, I'm afraid you're not going to find any assumable conventional loans on there at all. The vast majority, 99.9% of conventional loans are not assumable. That's why we focus in on FHA, VA, and USDA, which, I mean, there are 4 million FHA, VA, and USDA loans in the areas that we cover with interest rates below 5%. And about 35 to 40,000 of those are actively listed, you know, perpetually throughout the year. Obviously, they go on the market and then off the market. Right now, it's over 40,000. In a quieter time of year, it might be 35, but you're going to see real listings. It's going to really happen.
All right. Why don't we wrap it up, Nora?
Sure. And I just want to say, Brandon's asked again. Okay, so USDA not eligible for second home buyers. You have to live in the USDA and the FHA homes for 12 months, no matter what. VA, if the buyer is using his or her own VA entitlement to substitute for the VA seller's entitlement, then yes, the VA buyer using their entitlement does have to occupy for 12 months, because these government-backed loan programs are designed for home ownership. They're not designed to fund second homes or investment properties. That being said, if the VA seller is willing to leave behind the portion of their entitlement tied to the property, are you guys tired of hearing me say that? If they're willing to leave behind that entitlement, the portion of their entitlement tied to the property, then anyone can assume that loan and purchase that property, a second home buyer, an investor, etc.
Great. The Helma asked, someone said that we had TC services, and that is true. We do help agents around the country with assumptions. Usually once you get it under contract, though, you can reach out to us if you have specific questions about what forms to use. We do, have a VA assumption addendum or an FHA assumption addendum that is usable in all 50 states. I know certain local boards have their own assumption addendums, and so by all means, use what you think is appropriate. Once you get the home under contract and you need help getting things started, you're welcome to reach out to us, and we'll happily, have you work with our transaction team. We don't do, much of the kind of transactions, so we don't coordinate home inspections or termite inspections. We specifically focus on the assumption process and working with the lender to get the assumption approved. And we do that from the time you get it, typically from when it's under contract through settlement. And then there is a separate fee for that, generally paid by the buyers, because they're the ones who are benefiting the most from the assumable mortgage. So they typically pay it. So it's not a cost generally paid by agents. And then that fee is actually only charged once the loan is approved. So we don't actually charge that fee until the loan is approved.
Wonderful. A few other questions. So we keep having people ask about USDA. USDA has to be a home buyer. FHA, somebody asked, does the FHA seller lose any eligibility when they allow the assumption? And the answer is no. The FHA seller loses nothing. So it's a little easier to get the FHA sellers to agree, I find. However, the FHA sellers are still going to have all kinds of misconceptions and fears. They're going to go to the internet. They're going to go to ChatGPT. They're going to hear a lot of, mixed information. This is the one place I think ChatGPT and Google Gemini have a lot of useful information. I find them incredibly helpful for my life. This is the one place where when a buyer calls me, and I do talk to thousands of buyers and thousands of agents all the time, when a buyer calls me and says, hey, Nora, I was looking on ChatGPT, I already know, uh-oh. And they say, Nora, ChatGPT told me this was true. And I said, ChatGPT is searching thousands of blog posts that are giving you wrong information. And half of that information is just wrong because people writing blogs don't know. And half of it is wrong because we at AssumeList have actually built the solutions to the problems they're talking about. So you never, ever, ever have to worry. When we tell you it's doable, when we tell you it's not doable, we really mean it. And when we tell you it's doable, we really mean it.
All right. AssumeList.com is back up. So we were able to clear that hurdle. So not everybody all at once. I mean, I think we're probably fine at this point, but yeah, you should be able to access it. Let me just try to share my screen one more time and see what happens here. And so Nora, if you can let me know if you see my screen.
Okay.
Let me know. Yep. Okay. So you can.
I see it.
So actually, I'm logged in right now, so it's not going to give me the option to sign up because I'm already logged in. So let me just see if I log out, and it should show me the homepage here in just a second. Unless we're still lagging, it could still be lagging here just because of all the demand. But when you go to AssumeList.com, you'll see the red button at the top right side of the page, and it will have the option to get started. Click on the EXP and you'll be ready to go. Just enter in that code and it will be fully functioning.
I just want to call out as we support people. I love supporting real estate agents in technical things. I know that you guys are blessed with people skills and blessed with physical world skills. So sometimes a little hand holding for technical is nice, right? As Mike is taking us through. And do you see what Mike has done with this EXP dropdown under Get Started? So that's where you go to enter your registration code. While we're doing that, I just want to highlight the fact that a very special person entered the chat, a person by the name of Mr. Gary Meek, who is a tremendous asset to us here at AssumeList. We're so grateful to him and his wife Jennifer for advocating.
And EXP mega team owner, mega team agent and owner out of Roseville, California.
Absolutely. We are so grateful to Gary and Jennifer Meek for advocating for AssumeList and helping make this possible for all of you. I mean, talk about service mindset. So Gary has asked us to mention about appraisals. So let's just talk about a few things about appraisals. Number one, if you are doing an assumable mortgage, if you're brokering a purchase with an assumable mortgage and there is no secondary financing, no second mortgage at play, etc., then you will have no appraisal. So all of those other issues, I know some of you have been doing this a long time. Who here knows about how hard and challenging VA appraisals can be? No VA appraisal if you're not bringing, no VA appraisal, period, because the second mortgage actually has to come from a different lending institution, and it is not a VA loan product at all. So there are no VA appraisals involved in any VA assumptions. There are also no FHA appraisals involved. I know, talking to folks in Riverside, California, and some other places where FHA loans are very, very common, like Austin, Texas, I have learned that the FHA appraisals and the FHA requirements can be very daunting when there's a sale where someone is taking out a brand new FHA loan. Not with an assumption. With an FHA assumption, there's no checking of FHA requirements or codes or any of that. The only appraisals that happen with an assumption will happen with regard to the second mortgage financing, and those will be much easier to pass than a VA or FHA appraisal. So I just want to make sure I put that out there.
Great, thanks, Nora. And those still with us and able to see the screen, this is the page where you enter that registration code. And then once you enter that code, I'll just go ahead and type it in, TH16J7NB. Go ahead and submit. And it should take us right to the actual registration page, which will give us the fields that you just need to enter to create your account. I do see that there's a lot of people hitting the website right now. So we're going to work through the getting the website fully up and running. Certainly by this evening, that'll be completed. Wasn't expecting there to be any issues with this, but can't ever plan for everything, of course, with technology. So as you see on the screen, this is the actual registration page. Once you enter your code, there's a key thing I want to point out here. Enter your first name, last name. The primary email address is the email address that you'd like to use for your login and what other clients would see from you when you share properties, when you communicate with them, within the platform. That's your primary email address. Create your password, enter your license state and your primary license number. This is important because when you create sub-accounts, it will allow buyers to access the same assumable mortgage data in any state in which you're licensed. So if you're licensed in multiple states, once you log in and set up your profile, you can add additional licenses to it if you have any additional state licenses. Below that is the important part. Just for the registration, since this is exclusively available to EXP agents, you will need to enter your official exprealty.com or exprealty.net email address. And then once you register, it will send a verification link to that official EXP email address, just to verify that you are who you are and that you are an EXP agent. And once that link is clicked on, that's it. You are done. You will then just use the primary email address that you include in your registration going forward to log in, and you're up and running. You're all set. It will ask you once you log in to create your agent profile, add a photo, your contact information. Highly recommend you do that. That will give your respective clients and anybody that you share assumable properties with a kind of branded landing page or experience that they receive from you whenever you share those properties. And so you want them to, have the photo and the contact information available to you. It's also really good for marketing because you could technically, do some email campaigns or perhaps some social media campaigns with properties to, generate leads out of it. We do that as well.
Just a couple of questions in the chat here. Brian Ostrovsky, he's asking, what is our fee? So the subscription is $79 a month, but it's free for EXP agents. Are you asking a different fee question? Our transaction management services do charge a fee. We have some other add-on services that also charge a fee, but your baseline subscription with all these bells and whistles we've talked about is free to you, thanks to the generosity of EXP. Maybe just in the interest of time, we can talk about the fees for different add-on services on one of the Q&As, or you can email support@assumelist.com, and I'm happy to get on the phone with you and help you with that. I also want to respond to Karina Crowder, who says $79 a month for non-EXP. It is $79 a month for non-EXP, but we also have other programs that allow agents to discount their subscriptions in different ways. So if you've got questions about that, feel free to email me at support@assumelist.com. Or
the easiest, the discount that we offer, I'm a military veteran, so we do 10% discount for service members through, when they sign up for a subscription. And there's a link to verify, I think it's a Sheer ID, one of those verification portals that verifies that you're affiliated with military, for non-EXP agents, of course, and they would get a 10% discount. That's generally the discount that we offer. 10% discounts. There's some other exclusive programs that we have, different relationships with other organizations and, different boards and realtor associations. But nobody else in the country, and I mean this, nobody else in the country offers free access to their agents other than EXP. So you guys have a really good brokerage that you're a part of, and we're very happy to be part of the partnership as well.
And for more of these questions, guys, please email support@assumelist.com. I will see the email. Mike will see the email. We will get back to you. I have to tell you, Mike had to fight me hard not to give out my cell phone number to you guys. He was like, Nora, you can't give out your number to 800 people. It's not okay. And I was like, but I want to. I want them all to call me. And as we see with our website, it might not be the best idea for all of you to have my phone number at the same time on the same day. But eventually, most of you will have my cell phone number. You'll see.
Awesome. Well, thank you, everybody. We'll go ahead and we'll end the webinar at this point. We appreciate all your questions, your engagement, your support. We look forward to seeing you on subsequent training events. Again, Nora hosts them Monday through Friday, 11 a.m. Eastern, 8 a.m. Pacific, and homes.assumelist.com/learn. You're welcome to come completely free of charge and bring your questions. And then also, if you want to reach out to us through email, support@assumelist.com, and we'll get back to you. Usually give us, a couple hours, maybe it's sometimes 24 hours, depending on how busy we are. But we absolutely want to support you and answer your questions and make sure that we have we have the best product out there. And if there's any feedback as you get your hands in it and start working with it, if there's any improvements that you'd like to see, send them our way as well. We'd love to further improve the platform to better support you, because frankly, if you're thinking about it, or if there's a way that would benefit you, then surely there's other agents out there that are thinking the same thing.
Absolutely.
And a lot of the capabilities that we offer through AssumeList really came about from our user base. Absolutely. Who said, hey, Mike, what about this? Or can it do that? Or can we display this? Or is this available, right? And so a lot of that kind of community feedback really enabled us to further improve. This platform is really designed to support agents, and that's what makes us unique.
Before you hit your big climax, I just want to answer one more question from Richard Rue. He asks, can we become an affiliate if you are with EXP? You absolutely can. So not only can you get a free AssumeList account, you can make money off of AssumeList by becoming an affiliate and telling other agents about us, telling your buyers and investors in your network about us, right? You all know some of those investors who think they're smarter than you, right? And you know that you know more than they do, but they're very, very specific about what they think. They would love to have nationwide access to AssumeList, right? Why shouldn't you make money off their subscription? So yes, please do sign up to be an affiliate. Okay, Mike, back to our regularly scheduled climax.
All right, that's it. We're rounds complete, as we say in the military. Thank you again for your attention, your time. We appreciate you, and we look forward to seeing you out there. So have a wonderful day, wonderful rest of your week, and go sell some real estate.